The 2024 M&A market boom, biggest deals and key trends. 2024 was a massive year for mergers and acquisitions. After a sluggish 2023, companies went on an M&A shopping spree, spending trillions of dollars to dominate their industries. But why did this happen? Which industries saw the biggest deals? And how will these acquisitions reshape the business world? Today we're breaking it all down. The numbers, the trends, the challenges, and the 10 biggest deals of 2024. If you're serious about understanding finance, investing, and the future of business, this is the video for you. Let's get started. Before diving into the trends, let's look at the raw numbers that defined the M&A market in 2024. Global deal value, $3.5 trillion, a 12% increase from 2023. Number of deals, over 40,000 transactions worldwide. Cross-border M&A, up 18% year-over-year, with the US, Europe, and Asia-Pacific leading the way. Private equity deals accounted for 30% of total deal volume as firms deployed their record-high $2.6 trillion in dry powder. Sector dominance, technology, energy, and healthcare made up over 75% of total deal value. M&A came roaring back, but not all sectors benefited equally. Mergers and acquisitions in 2024 were driven by three key factors. Economic stability returned, inflation cooled down, and central banks stabilized interest rates. This gave companies the confidence to pursue aggressive expansion strategies. Pent-up demand from 2023. Many deals were put on hold last year due to high borrowing costs. As conditions improved, companies moved quickly to close previously delayed transactions. The private equity boom. Private equity firms, sitting on record cash reserves, aggressively acquired undervalued businesses. These factors led to a major resurgence in deal-making across multiple industries. Which sectors dominated M&A in 2024? Technology and AI accounted for 35% of deals. The AI boom is real, and companies are in an arms race to acquire cutting-edge technology. NVIDIA, Microsoft, and Google made major acquisitions in semiconductors and AI startups. Even non-tech companies entered the market, buying AI firms to optimize operations. Energy and natural resources made up 22% of deals. Oil and gas giants continued consolidating assets, while renewable energy firms ramped up investments in solar, wind, and battery technology. Healthcare and biopharma accounted for 18% of deals. The pharmaceutical industry saw a wave of biotech acquisitions, with companies focusing on oncology and rare diseases. Digital healthcare startups were also prime M&A targets. Other industries saw notable activity, but these three dominated in both deal volume and total value. Let's break down the 10 biggest M&A deals of the year, because these are the ones that will shape the future of business. First, Broadcom acquires VMware for $69 billion. Broadcom made a power move, snapping up VMware for $69 billion. Why? Because cloud computing is the future, and Broadcom wants a front-row seat in enterprise software. Second, ExxonMobil's $59.5 billion takeover of Pioneer Natural Resources. Big oil isn't going anywhere just yet. ExxonMobil secured its dominance in U.S. shale oil with this massive acquisition. Third, Pfizer's $43 billion merger with Seagen. The biotech battle just got serious. Pfizer is doubling down on oncology drugs, aiming to lead the fight against cancer treatment. Fourth, NVIDIA's $21 billion semiconductor acquisition. AI is exploding, and NVIDIA knows it. By acquiring a key semiconductor company, they're making sure they stay the king of AI chips. And fifth, JP Morgan's $20 billion fintech takeover. Digital banking is evolving, and JP Morgan wants full control. This acquisition strengthens their grip on AI-driven financial services. Tesla's $18 billion EV battery investment. Tesla isn't just making cars, they're securing the raw materials for future EV batteries. This ensures their long-term dominance in the electric vehicle market. Amazon's $15 billion logistics expansion. Amazon just leveled up its global supply chain with this deal. Faster shipping, more control, and a clear edge in e-commerce. Shell's $15 billion green energy push. Oil giants are hedging their bets. Shell made a huge investment in renewables, expanding its hydrogen, wind, and solar energy projects. Blackstone's $12.7 billion real estate moves. Real estate isn't dead, at least not for Blackstone. They scooped up distressed properties, betting big on a market rebound. Disney's $10.5 billion streaming power play. The streaming wars are heating up. Disney expanded its portfolio, making sure it stays competitive against Netflix and Amazon Prime. That's over $300 billion in deals in just these 10 companies. So why did these companies make such huge moves? Here are the 3 biggest reasons behind the top M&A deals of 2024 market positioning. Companies want to eliminate competition and expand their monopoly power. Technology and innovation. The race for AI, biotech, and renewable energy is forcing companies to buy rather than build. Private equity and cash reserves. Private equity firms are sitting on trillions, and they're finally putting that money to work. Even with regulatory hurdles and economic uncertainties, businesses know they have to move fast or get left behind. What's next for M&A? Expect 3 major trends. AI-driven M&A companies will keep buying AI startups to dominate the next wave of innovation. Green energy deals. Renewables, hydrogen, and EV supply chains will continue seeing huge investments. More private equity buyouts. With high cash reserves, private equity firms will go after undervalued companies. 2025 is shaping up to be another huge year for M&A. 2024 saw a major resurgence in M&A, with total deal value hitting $3.5 trillion. Tech, energy, and healthcare dominated the biggest acquisitions. Strategic expansions, competitive positioning, and efficiency gains fueled the top 10 deals. 2025 will bring even more deals, but regulation and geopolitical risks could impact the pace of M&A activity. What are your thoughts on these massive acquisitions? Which deal surprised you the most? Let's continue the discussion in the comments. And if you want more deep dives into finance and investing, hit that subscribe button. Thanks for watching, and I'll see you in the next video.